Welcome to The Explainer. Today, we're diving into a totally unexpected, honestly fascinating collision of two completely different worlds. On one side, you have the hyper-modern, rapidly expanding digital AI boom, and on the other, the heavy, intensely physical world of industrial manufacturing. We're going to break down the latest earnings data from Venus Pipes and Tubes to uncover the literal, hidden infrastructure that is powering our digital future. I know what you might be wondering. What on earth does a traditional steel pipe company have to do with the AI boom? Usually when we talk about artificial intelligence, we're thinking about software, algorithms, and microchips, right? We definitely do not think about stainless steel. But as you'll see throughout this explainer, challenging that assumption is exactly where the value lies. Venus Pipes and Tubes is aggressively transforming from just a standard, run-of-the-mill manufacturer into a highly integrated solutions provider sitting right at the cutting edge of advanced infrastructure. All right, Section 1, AI and the pipe boom. Okay, let's dive into this. We all love to talk about the cloud like it's this ethereal, invisible, magical thing floating above us. But the physical reality is that the cloud is essentially just massive, warehouse-sized rooms packed with incredibly hot metal servers, generating a frankly staggering amount of heat. To keep those multi-million-dollar AI servers from literally melting down, Venus is moving into something called spooling. You can think of spooling as sort of like a pre-engineered building, but for piping. Instead of shipping raw pipes to a data center and having guys out there cutting and welding them on site, Venus fabricates these highly custom cooling networks in a strictly controlled factory. Then, they ship them out as modular, bolt-together pieces. Why does that matter? Because for these high-end GPU servers, even a single microscopic speck of on-site welding dust is an absolute catastrophe. Factory-controlled spooling guarantees rapid installation with literally zero contamination. It is a real game-changer. Moving on to Section 2, record-breaking financials. Now, before we go too far down the AI tech rabbit hole, we have to validate their underlying foundation. I mean, you can't successfully pivot into a high-tech, futuristic sector if your core business is falling apart, right? Well, fortunately for Venus, their foundation is an absolute powerhouse. For fiscal year 2026, they posted a massive 1,160.8 crore rupees in revenue. To put that into perspective, that is a 22% year-over-year growth. It proves their traditional pipe and tube manufacturing business is a cash engine, generating the serious capital they need to fund these ambitious new projects. And this brilliantly illustrates the sheer momentum they're carrying right now. Just looking specifically at their Q4 performance, revenue jumped from 258.1 crore to 302.2 crore. That's a 17% increase. And even better, their EBITDA grew by 19% up to 49.4 crore. What's super remarkable here is that they pulled off this kind of profitability growth despite navigating some really significant global supply chain disruptions during that exact same quarter. Which brings us to Section 3. The spooling pivot. So having that rock-solid financial footing is what actually enables them to make this fundamental shift up the industrial value chain. And the evolution here is pretty stark. In their old model, Venus was primarily just supplying standalone commodity piping products. You know, it's a solid business for sure, but it comes with inherently lower margins. The new model, it focuses entirely on integrated spooling solutions. By providing a custom-engineered, ready-to-install cooling network, Venus is offering significantly higher value addition to the client. It enables way faster project execution for the data centers, and crucially for Venus, it commands much, much higher margins. And the market is already responding to this strategy. Venus just recently secured a massive 185 crore letter of intent from a leading data center player to provide these exact spooling solutions we've been talking about. To pull this off, they're deploying roughly 70 crores in capital expenditure. But check out the unit economics here. Management anticipates an asset turnover ratio of around 3x. With commercial production slated to kick off by the third quarter of this fiscal year, they expect to execute this entire 185 crore order in just 15 months. It's an incredibly fast turnaround for that level of return. Let's look at Section 4, building the moat. To execute a pivot this aggressive, you can't be at the mercy of other suppliers. You need absolute control over your manufacturing process. So, to date, Venus has completed over 200 crores in capital expenditure to create a 100% backward integrated, one-stop piping solution. And by backward integrated, what I really mean is they are now manufacturing their own raw materials. Specifically, they're making their own mother hollow pipes rather than relying on external vendors. This is a formidable defensive moat. It secures their supply chain, massively improves their reliability, and totally protects their margins from wild swings in raw material prices. Let's take a look at the actual raw capacity numbers that this CapEx bought them. Right now, they're sitting at 27,600 metric tons per annum for welded pipes and 20,400 metric tons per annum for seamless pipes. But here's the wild part. Demand is so intensely strong that their initially planned seamless expansion of 4,800 tons, actually, scratch that, it had to be bumped up to a 6,000-ton expansion. They are literally having to scale their factories up in real time just to keep pace with how fast the market wants this stuff. But what's really interesting about this slide is how multidimensional this expansion is. It's not just about adding sheer tonnage. Notice the diverse strategic investments they're making here. They've acquired 15 acres of adjacent land, future-proofing their physical footprint. They've installed a specialized tandem JCO press, which is super cool because it allows them to manufacture uniquely long pipes that very few competitors can even produce. And crucially, they've brought on a senior marketing professional whose sole focus is to build relationships and target high-tech, new-age sectors like semiconductors and clean energy. They're attacking this from every angle. Section 5, Navigating Global Headwinds. Now, no company operates in a vacuum, right? And the macroeconomic environment has been, well, incredibly turbulent lately. Venus faced some severe headwinds this past year. We're talking global tariff uncertainties, the conflict in the Middle East, the related Red Sea shipping disruptions, and elevated raw material prices. In fact, the Middle East conflict actually caused some temporary softness in their Q4 exports. However, these external challenges were fiercely countered by booming domestic demand. Surging requirements right at home in India across power, oil and gas, chemicals, and of course data centers kept their overall growth highly robust. And honestly, despite all those severe shipping disruptions and geopolitical tensions we just talked about, Venus impressively maintained their export revenue share at above 30% for the full fiscal year. Keeping that kind of geographic diversification intact under pressure is a massive pillar of their resilience. Let's wrap things up with Section 6, the road to FY27. Management has laid out a really clear path to translating all these operational upgrades into hard financial returns, and it's built on massive revenue visibility. So the crucial point is that they are currently sitting on an approximately 685-core near-term pipeline. Let's break that down. It's composed of their solid 450-core base order book, plus that new 185-core data center letter of intent we discussed, and an anticipated 50-core tender win from BHEL. This tangible visibility is exactly what makes their aggressive, forward-looking targets highly credible. And management's guidance builds step by step. Step 1, execute on that 685-crore pipeline. Step 2 is delivering greater than 20% volume and revenue growth in this current fiscal year, FY27. And Step 3 is expanding their overall profitability to achieve an 18% blended EBITDA margin by FY28. And remember, this margin expansion is going to be directly fueled by those higher value spooling and integrated fittings businesses we were geeking out over earlier. I think this quote from management really hits the nail on the head. They said, "This is a very good opportunity in the Indian market. We are the first who's providing the solution to clients in the stainless pipe industry." It perfectly encapsulates the ultimate takeaway here. Venus is aggressively leveraging a first-mover advantage. By combining their legacy, established manufacturing capabilities with new, highly specialized fabrication, they're cementing themselves as an absolutely critical supplier for the infrastructure of tomorrow. Which leaves us with a final provocative thought to ponder. As the whole world fixates on the software, the algorithms, and the next generation of microchips, could traditional heavy industrial companies, the folks building the literal pipes, the steel, and the cooling networks, could they actually be the hidden, unappreciated winners of the AI revolution? It's pretty clear that our digital future relies on some very massive, very physical realities. Thank you so much for joining me for this explainer. I hope it gave you a fresh perspective on where the real value in technology is currently being built.